Welcome to today's panel on the Sukuk market and scaling the next trillion. The Sukuk market, both globally and regionally here in the Gulf, has had a phenomenal run these last few years. We've seen volumes grow year on year. We've seen the market draw in issuers from new geographies. And perhaps most importantly, we've seen the investor base continue to get deeper and deeper. Today's session is going to look at some of the factors that are expected to drive growth in the market in the coming years. And we're also going to naturally talk about some of the challenges that lay ahead. We have quite a bit to get into in only 30 minutes, so let's jump straight in. Mustafa, I think it'd be a good idea to start by getting a lay of the land. So perhaps you can give us a quick pulse check on the market.
Sure. Thank you, Mariam. I think most of us understand that Sukuk market is one of the fastest growing segments within Islamic finance. It sits at over $1 trillion today. It makes up roughly about 18% of the global Islamic finance industry. But what's interesting is that, whereas Islamic finance, has been around now for 50 years, the modern version, Sukuk really only took off about 2.5 decades ago, 25 years ago. So that has been tremendous growth in that spectrum. I think issuances sat at about 250 billion last year. There will be about 280 billion this year. So continuing to grow at more than double-digit rates, which is fantastic. But I think it's important to understand how the market is shaped as well. So where you have over 20 countries issuing Sukuk, it's highly concentrated in a few key markets. Malaysia and Saudi Arabia each make up almost 35% of Sukuk. So 70% of Sukuk issuances are coming just from these two markets. The UAE is another 12% and Indonesia is another 8%. So collectively, about 90% of the market or 80% of the market is coming from just these few countries. So it is highly concentrated. In Malaysia, the dynamics are different. You have a lot of smaller issuances, but a lot more of them. In Saudi Arabia, you have fewer issuances, but large volumes as well. So that is something that I think, as the industry evolves, you're going to see more markets play a more active role, move beyond simply issuing a, let's say, debut sovereign issuance followed by, maybe one or two blue chip corporates to get to a model where it's like Malaysia or Saudi Arabia, where you have across the market multiple corporates issuing and across multiple tenors as well.
It's very cold inside.
From a demand perspective,
Freezing.
I think what is interesting is that there is still a lot of unmet demand in the Sukuk space. So if you see issuances taking place, the Sukuk tranches are always oversubscribed compared to conventional tranches, and the coupon rates are lower as well, right? So corporates and sovereigns still have a commercial benefit to accessing Sukuk market. On the demand side, what you also see is that there's a significant interest from conventional investors as well. So at least half of Sukuk issuances are bought by conventional investors. So that is going to continue to drive people to opt into the Sukuk space where they're able to find the physical assets to underline those Sukuks. And finally, there's a number of emerging trends, which I think we'll talk about in the session as well. But I think that, this growth trajectory is not going to stall, it's going to continue in the near term.
Fantastic. Idrissa, very, very happy to have the buy-side perspective on the panel today. I mean, when we take a look at the market regionally here in the Gulf, how would you characterize investor sentiment for Sukuk right now?
Thank you, Mariam. I think the investors are quite happy with the level of issuance that we're seeing in Sukuk. I think as Mustafa said, if you look at 2025, investors were not coming in the region because they like it. They were coming because they were able to achieve the returns target that they were looking for. So looking at the market precisely, you can see that it's dominated by the like of the UAE and Saudi. But again, the prospect is quite attractive. We all know that Kuwait government changed the rules, so we're going to see them coming to the market. And again, nobody is trading the Sukuk for the objective in terms of returns. But that said, we agree that the dominance of the Sukuk market in the GCC is mainly by the government-related entities and the financials. But we expect that going forward, as we said, the next trillion, I think other entities will be able to issue as well.
Yeah, fantastic. I think that's given us a pretty comprehensive overview of where we stand, both globally and regionally. And now I'd like to focus on some of the factors that are expected to drive the growth and to build on the momentum that we've just spoken about. Diversification is one of those terms that is always talked about when it comes to growing any market. Sukuk or conventional, where the point at which you can diversify an investor base or an issuer base or even a product, that's the point at which you can expand the market, increase access, and therefore increase the likelihood of growing that market. Khurram, can you talk to us a bit about investor diversification? How can we attract more non-core investors to this space?
Thank you. Jazakallah khair. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Wa salatu wa salam ala Rasulullah. Great question, Miskin. I think for us to plan for the next $1 trillion for the Sukuk market, it's very, very important that we realize that we're not going to go and make much progress with the core set of investors. So as Mustafa was talking about the geographical distribution of the Sukuks, on the investor side, if you see, 60% of the Sukuk demand today comes from GCC. Right, another 20-25% comes from your core markets in Asia, which is Middle East, Indonesia, Malaysia, Indonesia, Brunei, your core Islamic investor base. How do we attract the European investors? How do we attract US investors, which are hardly 2-3% of the overall Sukuk investor base today? How do you attract the Asian investors? I've been for a very long time, very, very strong believer in bringing East Asia together with West Asia, which is Middle East, and get the two to talk more to each other. Because I think historically here in Middle East, we've been very, very westwards looking at the sort of US, looking at European markets. Very important that we start looking at Asia. Tremendous amount of opportunity. And I think if you look at the broader international landscape, especially with the whole tariffs issue that we saw at the beginning of this year, we started looking at countries starting to look at diversifying their trade corridors, diversifying away their investment partners. So therefore, as a result, we believe that for us as Islamic finance practitioners, to attract non-core set of investors, we have to really take the Sukuk as a platform to the next level. Now, these investors are non-faith driven investors. We have to acknowledge what is it that these investors need. These investors need maturity in Sukuk as a product. So they need that the Sukuk must comply with international standard. They need standardization. They need stability. They don't need noise. So within the industry, there's a lot of noise that we as Islamic finance players, we keep arguing about this is Sharia compliant, this is not Sharia compliant, standard 62, standard something else, right? So we need to keep this noise down because there's nothing that scares away an investor than this infighting that happens within the region. So I think what is very, very important is that we now kind of, Sukuks have been around for almost 20 plus years now. And it's very important that we kind of move this to that level of maturity, scale it, bring it to international standards, like the likes of ICMA, etc. And then, be able to reach out. It's very important that we go and create that awareness. We need to get into a roadshow mode where we go and talk to these investors. I would love to see more Islamic investors spending their time in Asia, in Beijing, in some of these hubs where these decisions are taking place. So I'll stop at that.
Fantastic. Idrissa, again, coming back to the buy-side perspective, what else do you think can be done to entice these investors? Are there any pricing or structural adjustments that can be made?
I think for us, the investor, we need to have an open discussion. And by open discussion, I'm talking about education. Because a lot of people seem to think that they know what Sukuk is, and when you ask them quite blankly what it is, what you tend to hear is about liquidity. So how much are you willing to invest in Sukuk? Because if you ask us at Ajij, we don't think you can meet any sovereign wealth fund having a dedicated Sukuk investment. So the $1 trillion that we saw so far has been driven by the supply side. And I think if you're talking about going to the next $1 trillion, we need to talk about the investor side. And by that, I mean making sure that we understand each other, because not everyone is investing in the Sukuk for religion-based. And I think some of them are investing because it's attractive. So analyze your Sukuk, make sure you understand the risk-reward, because you're not wasting your time by trying to understand the structure. The structure is, as you said, is a lot of noise. As Khurram said, it's a lot of noise. We think that if we move that on one side and we sit down, the Sukuk is an instrument. And you are not investing because you like it, you're investing because it's attractive. The risk profile is something that you understand. So for us, education will always be the distribution. Mm-hmm. So that's something we need to push forward.
So education and outreach seem to be pretty critical in terms of diversifying the investor base. Geographical diversification is another topic that I want to talk about, and it's something that we've seen really take place in the market in the last few years. So traditionally, this product has had its home in the Middle East and parts of Southeast Asia, as Mustafa was talking about. But in recent years, we've seen issuers across the US, across Europe, other parts of Asia, take an interest in this market for the various reasons that we've discussed. Even now, we're hearing that there are some sovereigns in Africa that are looking to debut in the market, the likes of Benin and Senegal. So there's a lot of momentum there. Idris, I want you to talk to us a bit about which regions offer the most potential for growth.
I think we have to look at it in two lenses. If you take the next 5 years, I think the GCC will continue to drive the issuance. But if you go further than that, I think all other countries from, as you mentioned, North Africa or Asia will come into the dance. But at the end of the day, they need to be familiar with the structure. I think standardization is a word that we like to use on our side. But for me, it's not really the standardization that is the problem. It's because when you're talking about attracting investors from the Middle East, most of the issuers think that they need to issue Sukuk. But Sukuk is not really only for the Middle East investors. Sukuk is for everyone who is looking for a good return, less volatile investment. And as we can see in the recent 18 to, I'll say, 12 months, the Sukuk market has been well behaved. That's what we had the plethora of issuance. So I think that the next 5 years, the GCC will continue to dominate. But behind that, I think that other countries, as in Asia and Northern Africa, will definitely take the lead.
Mustafa, any thoughts on that? Geographical diversification, how do we encourage this?
No, I think I completely agree. I think that, as Idris mentioned, in the immediate near term, the GCC will continue to drive. And I think this is, because there is broad acceptance and understanding of the instrument in question. As you go into the, let's say 10 years or 15 years down the line, I think a lot of the countries that have in the last 5 years started on this Sukuk journey. So you have the likes of Philippines, you have the likes of, Hong Kong, the UK, many other markets that are, issuing their, sovereign issuances that they usually followed up by 1 or 2 corporate issuances from the larger blue chips. I think as they go down that journey, they're going to see that the Sukuk market is one that should be tapped into and can help them meet their economic aspirations. So I do agree, but as Khurram mentioned, the noise is something that really scares investors, right? When you're entering the Sukuk space, you already don't understand what the instrument is about. And then when you get a lot of noise, you get differing opinions, you get, uncertainty as to what the future is going to look like, then, you retreat into your very familiar space of just issuing corporate bonds. So I think that would probably be the biggest hindrance. And I think we as an industry need to understand the responsibility that we hold when we talk about some of these challenges, because we don't want to damage the growth of the industry. We all want to see it succeed, right? So that has to be taken into account.
Most definitely, and we're going to touch on some of that noise in case some of you in the audience are interested, because we've heard that word quite a few times already. We will touch on that as one of the challenges. How about product diversification, Khurram? Can you talk to us a bit about some of the other products that can be used to boost supply?
Yeah, so I think there's a lot of room for us to bring product innovation in the Sukuk space. I mean, if you look at it purely from the perspective of tenor availability, large majority of the Sukuks that we have today, and I'm talking in international dollar Sukuk issuances, these are all long-dated Sukuks, 5 to 10 years mostly, right? We have seen very, very limited Sukuk issuances in the under 2 years tenor, for example, right? And there's a huge demand in that space, especially if you look at some of the money market funds, as you look at the treasuries or Islamic banks, they need the full spectrum of rates, the complete rate curve that need to be. So what we've seen over the years is the rise of what we call the CD programs. So till about last year, I think there were just 2. This year alone, we ourselves have been involved with another 6 programs. So there are about 8 Islamic banks who are now offering Islamic certificates of deposit. And this is an instrument, interestingly, if I tell you, we've seen a very interesting trend this year where we were talking about non-core investors. So we've seen a lot of Asian investors taking interest in these instruments. So we've seen Thai money market funds. We've seen private banks out of Singapore. Similarly, Vietnam, we've seen these investors coming and tapping into this segment. So I think that's definitely an area we need to see more issuances, because typically the investors in that space have relied on the likes of IILM, and they're not too many such options available, right? So I think tenor availability is one thing that we need to definitely diversify and get into more variety there. Number two is the types of structures. So we need to see more securitization. We need to see more EMTN programs come up. We need to see more commercial papers. I think Malaysia, to the best of my knowledge, is the only meaningful Islamic CP market that we see. There's tremendous potential for us to have that here in the Middle East. Of course, we want to see more corporate Sukuk issuances. So I think to have a flourishing Sukuk market, which we want to scale to the next $1 trillion, it is very important that we give that product variety to the investors.
Most definitely. Still on this topic of product diversification, Mustafa, I want us to talk a bit about the rise of ESG Sukuk. So ESG has taken over in all asset classes, all sectors you can think of, and it's made its way to the Sukuk market, but it's still a relatively nascent part when we look at the mix of sustainability-linked Sukuk, social Sukuk. Do you think ESG volumes can move the needle, or are they still just going to be a nice to have?
No, I think it's definitely, one of the most significant trends in the space. And I think that as we go forward, we're going to continue to see tremendous growth there. There's a couple of things to keep in mind when you think about this. One is there's a very natural alignment between ESG considerations and Sharia considerations, right? So the investor base that is looking or going out of its way to issue something that is Sharia compliant will have a natural affinity to the ESG consideration. And as you have more awareness about how it should be managed, how it should be tracked, the benefits of positive screening versus negative screening, that is going to play a role in this. The other thing that I think is very, very important is when you look at globally, which markets are leading when it comes to ESG, Islamic markets are playing a big role. I mean, if you look at the last 4 COPs, 3 of them were held in Muslim countries, Egypt, UAE, and Azerbaijan. The next one is going to be held in Turkey. So, 4 out of 5 are coming from these markets. So I think that there is a broad government drive to make ESG significant part of the broader financial services industry, and in particular Islamic finance. And within the stakeholders in the industry, there is an alignment there. So I think although it is small, it has been growing, I believe, over the last 5 years, grown at a CAGR of 60% year on year. So significantly outpacing, still a small base, but will become a major component of Sukuk in the next 5 years.
Idrissa, from an investor's perspective, is there sufficient appetite for these sorts of instruments, whether it's a social Sukuk or green Sukuk?
It's an interesting one. I don't know if the audience remember when the Sukuk and the ESG came to be the main focus. Some of the investors were thinking that Sukuk could be identified already as ESG compliant. But for us, the way we address it, I think it has to be an open conversation with your investors. What we found out is most of the time when we are meeting with investors, they have a bigger team looking at ESG. This is behind the scope of what we do in Sukuk. So what we came up with an agreement is to say, okay, since you have your way of looking at ESG and we are the expert in investment, we think that we have to find a pathway to meet. And that pathway is basically you tell us, for example, your exclusion list, and we optimize the portfolio based on what you are looking at. We didn't try to educate anyone on ESG because we think that we are the expert when it comes to investment. But we also realize that by talking to investors from the Middle East, from Europe or US, everyone has a different view. So that's why we said, okay, you have a bigger team, and most of the time, most investors don't like to admit it, they have a bigger ESG team than the investment team that we have. So it's better if we rely on you to tell us you are the expert in ESG, you constrain the universe, and we optimize on that. And we found it to be a great solution. So there's no more misunderstanding or discussion for waste of time, if I can use that term. So we think that it's always an open discussion. You are the expert. You know what you want. You know what you don't like. You tell us, and we tell you exactly what's the expectation in terms of your return. So everyone is an expert in what they do. So that's quite important for us to have an open communication with the investor and move forward.
Quite a nuanced discussion there on ESG Sukuk. I want to talk a bit about retail Sukuk, so broadening access to the Sukuk, getting these retail investors in. Mustafa, perhaps you can talk to us a bit about the impact of doing that. Where can we take lessons from?
Sure. I think, retail Sukuk is a very much untapped space because there is a lot of demand that exists, right? And we have very few examples of this, but the signs from those are very, very positive. If you look at Indonesia, Indonesia operates a green retail Sukuk program that currently sits at over $2 billion, right? So there's over $2 billion they've generated from the retail space that can help finance many of the government's green transition programs. If you look at the UAE has a tremendous example in Sukuk al-Watani, the national bonds program. And national bonds program, as of this year, had over $4 billion in assets, right? Almost, I think, 15.8 billion dirhams. So a tremendous program that is immediately redeemable, that is structured using Sukuk structures, that is available through technology, and that is being used very broadly. So I think the signs are very positive. In the UAE, in Bahrain, in Saudi, you have many institutions that are offering tokenization of Sukuk. So they're taking Sukuks and breaking them up into retail segments that are at much smaller denominations than the 200,000 typical denominations. So I think that is going to grow as a trend, but it is a tremendously untapped opportunity for Islamic finance. When you think of Islamic finance, banking, which is deposit driven, is the largest segment, right? By far, 70% of the industry. And a vast number of those customers don't have access to be able to invest in Sukuk. So retail Sukuks can help solve that problem for them.
Interesting. Okay, I think that's enough bullishness for now, and I think we can perhaps move on to some of the challenges that are expected to face market participants in the Sukuk space. The first and perhaps the most pressing is regulatory changes, and I think we've already referred to some of that on the panel. Mustafa and I were sitting on this very same panel 1 year ago, and we were talking about regulatory changes, namely AOFI Standard 62. And the several question marks that surrounded it at the time and the uncertainty that a lot of market participants had. And some would argue that we're sitting here 1 year later and there are just as many question marks and just as much lack of visibility. Khurram, perhaps I can get your take on where the market stands right now with Standard 62.
So I think there has been a healthy debate in the industry on this subject. If you just step back and look at the broader framework of what came out from IOFI, you have to appreciate and respect the intent and objective of what is being trying to achieve. Sukuk as an instrument has been around 20 plus years. It started off as a base concept. Over the years, a lot of things have come in, a lot of evolution has happened, and the attempt from IOFI is to refine the product, right? From a Sharia perspective, obviously there are certain expectations from the Sharia circles, from the Sharia scholar. These are very legitimate asks, I think, that the scholars are asking for. The important point is, how do you draw the right balance between trying to achieve a higher level or higher degree of Sharia compliance versus practical issues, the practical challenges which the investors, in terms of their requirements, issuers, what challenges they have. So some of the core issues that have come up in this discussion are, around the issue of title transfer. I think UAE takes a lot of credit. The central bank, the higher Sharia authority there, they took lead in this whole conversation and have been actively working with the industry. And we are part of the Sukuk working committee here with the HSA Secretariat, trying to solve that issue ahead of IOFI coming out and issuing their standards. So I think currently where we stand, IOFI has publicly come out and they've kind of announced that they've put the process on hold. They are in that advanced stage of further consultation with the industry. They've heard the industry. They acknowledge and respect the feedback that has come. It's now about finding that right balance, that right middle ground that allows us to, inshallah, progress with the Sharia quality of the Sukuk structure, but at the same time meet the requirements of the issuer, the requirements from a legal and from a regulatory perspective to allow us, inshallah, to scale Sukuk to the next $1 trillion.
Mustafa, in this discussions that you're having with market participants, how do you see issuers trying to navigate this space? Are we seeing any workarounds being developed?
So it is a major challenge, and I completely agree with Khurram and a sentiment that the motivation behind the standard is a noble motivation, right? To bring it in line with Sharia. When we spoke last year, we were on the cusp of the standard being mandated and then the grandfathering period kicking in. Now the standard has been put on hold, and credit to IOFI that they have taken the feedback from the market and they are looking to ensure that market concerns are addressed. I think there are certain key issues that the standard brings that need to be really considered. One is the sovereign challenge, right? Transferring of assets of sovereign is very different than a corporate or any other type of issuer, right? There are legal challenges, legislative challenges, laws have to be changed in countries, and security has to be considered as well. So that, I think, will continue, and it's very difficult to address that. The challenge that rating agencies have highlighted to us as well, as if we push the instrument too far on the equity spectrum, then the rating implications and what that means for the instrument have to also be taken into account. I mean, to your question about issuers, we've had conversations with issuers very recently, and they've put in task forces where they look at upcoming Sukuk issuances and to determine what is the feasibility of it being HSA compliant versus IOFI compliant versus the pre-existing structures that they've adopted, right? So it's definitely on their radar. There are workarounds that people are looking at that have not been made public yet, but they have them in the back burner in case they need to adopt them. So the market has taken this point seriously. They have developed structures to make sure that the industry doesn't collapse, and some of the risks are taken into account. But I think when the standard is eventually launched, it's going to be one that is much more aligned to the market considerations and will be something that will continue to help drive the growth of the industry, inshallah.
Fantastic. If we had more time, there were a few more challenges that I would love to get into, standardization being one of them, and I know that Idrissa has some thoughts on that. But we only have just over a minute left, so I think it'd be good to wrap up with a closing thought from each of our panelists. And the question that I was thinking about was, if there is one thing that has to be done, one action that has to be taken, be it by issuers, investors, or regulators, that could most advance growth and accelerate us towards the next trillion, what is it? Idrissa, we'll start with you.
Great. I thought you'll start on the other end. I think for me, I'll answer it with a quote from Mark Twain, because I think that it fits perfectly the Sukuk universe and the Sukuk investment. It goes as, it's not what you don't know that will put you in trouble. It's what you know for sure that's not true that will put you in trouble. Because most of us, when we're investing in Sukuk, we have a lot of assumptions. You never go into a meeting with an investor willing to learn. They're willing to tell you what they know. So I'll advise everyone to go back to the basic before getting into Sukuk.
Khurram?
I think it's important for us to scale the Sukuk market, open it up to non-core investors, open it up to non-core issuers, and that's a responsibility that lies us as practitioners, be it bankers, be it Sharia scholars, be it regulators in the Islamic finance market. I think that is absolutely critical for us to take Sukuk to the next $1 trillion level.
Mustafa, the one action.
I think I'll mention two very quickly. One, retail, which we discussed, which I think is a tremendous untapped potential. The other is, I think you really have to open Sukuk issuances from a corporate perspective. And one thing we can learn from Malaysia is the role that RAM rating has played within that market to open up Sukuk issuance. So it's a local rating agency that issues rating advice on corporate issuances in the local market. I think if you had more of those, so that smaller corporates wouldn't have to rely on the S&Ps and the Fitches, but could have a local institution that can, at a commercially viable option, provide them the rating, that could significantly open up the corporate Sukuk space.
Interesting. Okay, I hadn't thought about that one. Fantastic. Well, thank you very much to our panelists for sharing their contributions, and thank you all for attending. We hope you found that useful. Thank you.